Hello and welcome to Newsclick. I am Paranjoy Guha Thakurtha, and joining me all the way from Greenwich, Connecticut, near New York City in the United States of America, is Dr. Bhamy V Shenoy. He's an expert on the oil industry. He was a manager with an American multinational oil exploration company called Conoco, based out of Houston in Texas. And he's also a former director of the National Oil Company of Georgia. And he's been writing a number of articles on the petroleum industry, on the oil sector. So thank you so much, Dr. Shenoy, for giving us your time. Let me start with what happened on Monday, the 20th of April. Everybody was taken aback. For the first time in the history of the world, the price of the benchmark crude oil of the United States, WTI, West Texas Intermediate, crashed to minus $37 per barrel. Now, something like this had never happened before. And most analysts argue that this was something, a quirk, an aberration, something very peculiar, because there was a trading deadline, and this is all about future prices. Essentially, there were no places to store oil. So there was nowhere to store oil, and therefore something like this happened for the first time. And soon thereafter, on Tuesday, the 21st of April, prices had gone back to where they were, which was in the region of between $20 and $25 a barrel. WTI, West Texas Intermediate, was around 20, and Brent was around 25. How do you explain this aberration? How do you explain something like this that has never happened before?
We should take a look at it in two different ways. One is what you just now mentioned. People were totally surprised, including people like myself who have grown with this futures market. I was active in market when there was no futures at all. And we had similar kind of price crashes and price increases. So it was perfectly all right. So what happened on Monday, everybody was surprised when it was going into negative. And it started to fall from $18. They thought that, okay, it's just reflecting. But then it went to zero. Then it may stop over there, but it went to minus $40. It really shows one thing about how futures market has completely failed to do what economists call as discovery of price. It has not discovered the price at all. It has just played a joke on the market. That is the way I put it.
Would you compare it to like a gambling casino almost?
It is, as you know from my writing, futures market is just nothing but a gambling casino like the Las Vegas. The difference between Las Vegas and this gambling casino is, in Las Vegas, people who gamble, they lose sometimes, maybe once in a while they win, and the hotel people are the ones who are the winners. In this gambling casino, no doubt, people who speculate, they are winners and losers, but there are a lot of other countries who are losing and winning. Because whenever you speculate, the prices go far more. Like there was no reason at all why the prices went to $150. It did not discover any price at all. And when it fell to $20 or $25, that was also an aberration. And this is exactly what happened yesterday. So they all call that as history being made. Yes, history being made for the wrong reason. Because if at all we have learned anything at all, we should really think in terms of how to get rid of this futures market and a different way of trying to find out the price rather than this one. But that is one other subject. But now you said that this morning again, the May futures, because it is going to close down today, it is still at zero. And the market has fallen to $15 for the June, because it is the next one. Now they are thinking whether the similar thing will happen for June. So let us try to understand why we reach this place.
Okay. The reason, this is exactly what I want you to elaborate on. When in the recent past, the crude oil prices had peaked at about $65 a barrel. When the calendar year began in early January to 2020, it was in the region of about $60 a barrel. And then it crashed to about $20 a barrel, about 1/3 of that price by the end of March, by which time the coronavirus epidemic, the COVID epidemic was widespread, and the entire world was not just, they were all anticipating a major economic crisis, the likes of which they'd never seen before, unprecedented. And in that context, what had happened, what had preceded that was a big fight that took place between the Saudi Arabia, and which is the de facto leader of OPEC, the Organization of Petroleum Exporting Countries, and Russia. And earlier there was an understanding of sort, they called it OPEC plus, but that clearly broke down. Maybe you can explain what happened.
See, let us go back a little bit to the history. In 1986, we had a similar one. It was the first price war because Saudi Arabia was supporting everybody. And almost it looked like Saudi Arabia has to buy from others to support the price. Then they said it is over. And now we are going to sell price at whatever it takes to the market. Prices collapsed to single digit. Then again, there was a second price war, but it lasted only a short time. And in 2014, Saudi Arabia again started the price war. The reason was that they saw the demand for their production was going down and shale oil was coming up. So they said that, okay, they are going to sell price whatever it requires, and the prices started to fall. Then Russia came together, and then that was the time when OPEC Plus formed, and 2016, the prices started to go up again. And then they saw that even at, because earlier 2014, they thought that they would have wiped off shale oil, but it did not. Shale oil was still coming up, and US became the largest oil producer. So then again, the game started between Saudi Arabia and Russia. When they met in 2020 on March 6th, that is March 5th, OPEC met and they decided, okay, they are going to cut some more oil by 1.5 million barrels per day with the help of Russia. On March 6th, when Russia came and they just walked out, it was a total surprise to Saudi Arabia because Mohammed bin Sultan was he thought that he was a great friend
Mohammed bin Salman.
So why did he walk out? He was rather surprised. And we still do not know why actually Russia walked out. And when the market realized that this is not going to stick, that day it fell almost by 30% again. It was one of those historic firsts. We are seeing so many historic firsts nowadays. And they were trying to figure it out. Was Russia wanted to teach a lesson to US, or is it because of the sanctions against Nord Stream that they wanted to teach a lesson? Whatever it was. But surprisingly, Trump, the great negotiator, to the surprise of everybody, brought these MBS and Putin together on April 9th. So April 9th, they said, okay, we are going to cut by 10 million barrels per day, which again, the market thought that it was a great thing because never in the history of OPEC, such a big drop was ever considered. Actually, it was not 10 million barrels per day. We all know now it is 7 or so. Then Mexico tried to play its role and somehow or other Trump managed it.
But tell me, sir, I'm interrupting you.
Yeah.
Trump's latest pronouncement, he says we don't need Saudi oil. So, I mean, should we take him seriously? He said we have enough of our own. I mean, here he's, what kind of message is he? Is he blowing hot and blowing cold? What kind of message is he sending?
It is the typical Trump, without really knowing how the market works. And yes, US is exporting, but still it is a net importer. The reason it is exporting is that its refineries have been all converted to handle heavy oil. So they don't like to use the light oil. The light oil they export and heavy oil they import, but they are still a net importer of oil. That is number one. And without Saudi oil, I don't think that, not I don't think, I'm sure that the world cannot manage. So he's just talking off his head.
Okay, so let me recount quickly a few important sort of landmarks in the history, and I'm drawing on your own writings also. Before OPEC was formed in 1960, before the Organization of Petroleum Exporting Countries came into being, the oil market was dominated by the so-called Seven Sisters. There were American multinationals like Exxon and Chevron and Shell, and there was also the British Petroleum Group, there was Esso, Standard Oil, and so on and so forth. After OPEC was formed in 1960, as you mentioned there was in 1973 the Arab oil embargo. And then in 77, 78, you had the overthrow of the Iran government and the fight between Iran and Iraq. And then in 1991, you had Iraq's invasion of Kuwait. All these three, what you describe as important oil shocks, resulted in prices going up. And as you mentioned, then you had four major price shocks. 1986, about which you've already talked about. Then there was 1987, 2014-16, when from 2014 middle, the price came down from $115 a barrel to $26 a barrel in 2016. And now the latest development. The short point is, we ordinary individuals, we don't understand what's going on. We were hearing all this while about peak oil, that the oil demand would peak and that the world would be moving towards renewables and be less dependent on petroleum. But now we also talk about peak demand, electric vehicles, and so on and so forth. If you can demystify all this jargon and tell us, where are we going from here?
More than likely, what is likely to happen now is with such low prices, there will be little easy going on transition, because it will be difficult for some of the renewables to compete against oil at this price. It is highly unlikely the oil price will go to anything like $100 for a very, very long time. There is plenty of oil, and especially because of the peak demand. So I don't think that that energy transition, which would have otherwise taken place by maybe 2035, 2040, when the peak demand would have happened, now it is likely to be delayed. That is number one. And as far as India is concerned, what we should really do is that we should not allow these lower prices, the benefit, to go to the consumers. I know I'm not going to be very popular with a lot of people when I say that one. The reason is like this: if we want to really, and which we should, to expedite energy transition in our country, for that one, we should try to discourage private transportation.
Okay, let me stop you here. Let me give you the contrarian viewpoint. India is importing more than 80% of the country's total requirements of crude oil. Okay, now many believe that what has happened really between 2014 and today is that the government has grabbed more than the lion's share of all the benefits of the lower crude oil prices by constantly increasing taxes, excise duties in particular, and not passing on the benefit to ordinary consumers. The purchasers of petrol, those who purchase petrol, those who purchase diesel, all of which have an impact on inflation rates. Now, the government, by one estimate, would have gathered a stupendous amount of money, which is really half the union budget, sorry, not half the union budget, but if you take our GDP to be 200 lakh crores, about 10 lakh crores is what, that's 5% really of our GDP, really accrued to the government of India in this period of time, in this period of the last 5.5 years, through taxes. Now this, according to many, is not such a good thing because it is increasing inflation and will not help the consumer. So that's the contrary viewpoint.
No, I would like to give contrary view for that one. Number one, all over the world, in fact, the taxes on petrol and diesel are far more than what is in India. To some extent, they are almost like not really comparable to the US, but slightly higher than the US. The only place where the taxes are low are the places where these autocrats are in charge, like in the oil exporting countries of Gulf. And number two, you are telling about they have taken away this much money. We forget that these very people, even the middle class and the rich, are getting the benefit. Those only very few people have given up their LPG subsidy. So there is a lot of LPG subsidies given, may not be comparable to what the government has taken in the tax form. So there is subsidy given to them. And the government is rightly subsidizing the poor to buy kerosene. So if you do not have the kind of tax revenue from petrol, how can government run? And now today, again, during the COVID, during the COVID, we want to help a lot of poor people because of the lockdown. Where would government get the revenue? So I think that that is why I'm saying that as the prices are coming down to $20, $25, government should try to increase the excise taxes and increase the revenue from petrol. That is number one. Number two, this is the right time because the LPG subsidy is small today, that they should really stop giving the universal LPG subsidy and give it only to those BPL families. That is the number two.
Let me give you the top, another viewpoint. One viewpoint is yes, nobody can have any disagreement that the subsidies should reach the poor. But when you look at subsidies on diesel, when you look at subsidies on petrol, they are adding to your transportation costs. Mm-hmm. Nobody has any disagreement when you said we should encourage public transport and discourage private transport. But what happens when you allow the costs or the prices to go up or not go down? Let me put it this way: you are actually hurting the poor. Why? Because the transportation costs go up. It has a ripple effect on the economy. The price of all items, including essential goods, happen. So when there's inflation, that's also a tax on the poor. So in what way are you actually helping the poor if the government gets the lion's share of the taxes from oil? Yes.
Okay, Mr. Goa, in that case again, as you know that in the case of transportation, for the students, they are giving passes. Similarly, if you want to help the poor people to travel cheaper, you give them some kind of passes and try to help them, just like I just mentioned that they should give subsidy to the LPG. But if you really take a look at, and I have done the analysis and you have published my article also, if you look at diesel, who are the ones? The ones who are going by SUVs and others, the diesel, should we try to subsidize them?
How do you target? The question is, how do you target subsidies?
Well, it may not be perfect, but it is better. And the reason is that earlier we said that we are importing more than 80% of our petrol and diesel, indirectly or directly.
Of our crude oil.
For the crude oil, okay? So we are importing them. And if you want to reduce them, we have to somehow or other reduce their consumption, not allow them by selling it cheap. We cannot afford to do that one. So we have to give the right pricing signal. And in terms of the inflation also, if you take a look at the total budget, the inflationary effect of prices is not that high as one thinks it is. So from all the point of view, if you take a look at it, the government has done the right thing by not passing on the benefit of lower crude oil prices, and they should do even more.
As you yourself said, you won't exactly become a very popular person when you advocate these things. Okay, my last question really to you. Okay, my penultimate question to you. You've written an article in Newsclick on this. There was a proposal from Aramco, the Saudi big oil company, to invest in India's biggest private company, that's Reliance Industries Limited. It was supposed to buy a 1/5 of its stake in the oil business of Reliance Industries Limited to help it become a zero debt company. The Aramco was also looking at investing a fairly substantial amount of money, about almost 30 billion US dollars, in a large refinery cum petrochemicals complex in Ratnagiri in Maharashtra, which was a joint venture between, a proposed joint venture between Aramco and 3 public sector undertakings, Indian Oil Corporation, Bharat Petroleum, and Hindustan Petroleum. What do you think is going to happen to these investments, or do you think these investments will materialize? And a related question would be, do you really expect that the disinvestment or the privatization program announced by the government would actually come through?
My feeling is that it is likely to be postponed for at least 2 or 3 years till the financial situation of Aramco will improve. With such low prices, Aramco has to definitely give money to the Saudi government in one way or the other. So there will not be enough cash flow for Aramco to support any of these projects. Besides the 2 that you are talking about, I had also said that Indian government should try to think in terms of trying to sell their interest in HPCL and BPCL to not just to Aramco, to other Gulf companies like Kuwait Oil.
But do you actually see that happening?
No, it is not. It is highly unlikely it will happen in the next 2 or 3 years. But this is a time when the government should really talk to these companies, and when the situation change, they should be able to sell them. So they should not keep quiet now because the situation is bad. But it is highly unlikely at this time they will have enough money to buy.
Many believe this would be a completely wrong strategy. The employees are opposed to it because they believe that this kind of privatization would not help the country, that it would help a few others, and it would go against the public interest, because at the end of the day, these are the same public sector companies which have bailed out the government of India. And you want to sell the family silver, literally, as they say, to pay the butler. I'm paraphrasing what James Callaghan used to say when he was opposed to Margaret Thatcher's privatization program, that you are selling the national assets, you're selling jewels, but at the end of the day, you're going to use it up. You're not going to reinvest it, and so the nation as a whole will not gain. That's the other viewpoint.
Well, this is again another topic for one entire session, because actually by government owning these companies, the employees who are working over there, whether at lower level or at management level, they have suffered because it is really the political people who have tried to use these public sector oil companies as their private ATMs. So when they should have really invested to process the heavy crude, like what Reliance has done. I don't have high admiration for Reliance management, as you know very well, but the refinery that they have built is really world class. How did they do it? The public sector company should have done it. I had advised them so many times, go to do that one, because this is exactly what the US companies did long time back. And it was because it was run by these babus, they did not do that one. So that's why I'm saying that it is a topic for another thing.
All right, we may have another discussion on this point of time. Last question to you. They said you are God if you know where the price of oil is going to go. Where do you think the price of oil is going to go in the next few months?
The next few months, you are right. I always write, either one has to be a genius or a foolish to predict prices, and I'm neither of that. But my gut feeling is that it is likely to remain around $25 to $35 or no more than $40. And
you're saying the present range, which is around 2025, will be about $25 to $40, correct?
$40. That it is highly unlikely it will go above that, and that is why I was suggesting that the government should really take now proactive steps of trying to get rid of this universal LPG subsidy. That will be one of the greatest contributions to the economy.
Thank you. Thank you, Dr. Shenoy, for giving us your time. And time alone will tell whether the government listens to you or doesn't listen to you, whether oil prices behave in the way they will or not behave. Thank you once again for being with us. And thank you for being with us on this program. All those who have heard and watched this program on Newsclick, keep watching Newsclick.